I remember the first time I saw someone turn a tiny account into something life-changing. It was 2009. The markets were chaotic, liquidity thin, and fear was everywhere. A trader I knew, let's call him Daniel, started with just $100. He wasn't some genius, nor did he have access to Wall Street's algorithms. He was just different. At that time, I had already been trading for a few years. I had bigger capital, more tools, and what I thought was experience. Yet Daniel's small account grew while mine bled out. I couldn't understand it. How could someone trade from a cafe on an old laptop and double, triple, even quintuple his account in months, while others, like me, kept losing ground? That question haunted me for years. It wasn't about luck. It wasn't about strategy. It was something deeper, something invisible, a mindset that shaped every decision, every click, every reaction to pain and greed. You see, the markets are a mirror. They don't reward skill alone. They reward awareness. And most traders, myself included back then, were blind. We traded from ego, from fear, from hope, but not from truth. Today, after 15 years in the markets, I've seen hundreds of traders come and go. Some had brilliant systems, but burned out. Others, with modest tools, became quietly wealthy. And the difference between them wasn't technical, it was psychological. So in this story, I want to take you through what I learned from Daniel and from my own failures. We'll talk about the exact mental shifts that separate a losing trader from one who can compound a $100 account into seven figures over time. Not by gambling, not by hype, but through something far more powerful, the discipline to think like a professional long before you become one. Because the truth is, most traders try to grow their accounts when what they really need to grow is their mind. When I started trading, I wasn't chasing millions. I was chasing freedom. I had this romantic idea of sitting in front of a laptop, trading from anywhere, watching charts move while I sipped coffee and made money. That dream hooked me harder than anything else. But dreams built on illusions have a way of turning into nightmares fast. I blew my first account within weeks. It was $1,200, money I couldn't really afford to lose, but I told myself it was an investment in my future. When it was gone, I felt this strange mix of anger and shame. Anger that the market took my money. Shame that maybe I wasn't cut out for this. But the truth was, it wasn't the market's fault. It was me. I didn't have a plan. I didn't respect risk. I was obsessed with being right instead of being consistent. And that's how most traders die in this game. They want to win, not last. In those early days, my charts looked like a war zone. Indicators everywhere, lines crossing lines, and me jumping in and out of trades like I was trying to outsmart chaos itself. Every green candle looked like opportunity. Every red candle looked like danger. I was trading emotion, not logic. Then came the crash of 2008. Markets went insane. I remember sitting at my desk watching Euro USD drop hundreds of pips in minutes and feeling both terrified and addicted. It was like watching a storm destroy a city while thinking you could somehow surf the waves. That period taught me something fundamental. The market doesn't care about your feelings. It rewards patience, punishes impulsivity, and exposes every weakness in your psychology. Over time, I started noticing patterns, not just in the market, but in myself. I would get overconfident after a winning streak, start increasing my lot size, and then lose it all in one bad move. Or I'd go through losing periods and start revenge trading, just to feel in control again. It was always the same cycle: hope, greed, fear, regret. And that's when I started thinking about Daniel again, the guy who turned $100 into something extraordinary. I realized it wasn't his strategy that mattered most. It was how he thought about money, risk, and himself.
He once told me something that didn't make sense at the time. Most traders lose because they treat $100 like it's nothing. They act differently when the number is small. But the market doesn't care about your balance. It only responds to your decisions. Trade your $100 like it's $1,000,000, and one day it might become one. It took me years to understand that. The size of your account doesn't define your potential. Your mindset does. So I started from scratch. I built a small account again. This time, I didn't trade to double it. I traded to become consistent, to stop fighting the market and start listening to it. I journaled every trade, every thought, every emotion. I tracked not just my results, but my behavior. I learned to sit through boredom, to respect drawdowns, and to detach from the need to be right. And slowly, the game began to change. Not because I found a magic strategy, but because I started to understand the real game, the one that happens inside your head. There was a morning I'll never forget. It was a Tuesday, around 5:30 a.m. I was staring at my screen, half asleep, watching a setup on gold unfold. I'd been tracking it for days, a clean breakout structure, textbook entry. Everything lined up perfectly. And then I hesitated. Something inside me whispered, "Don't rush this one." In the past, I'd have jumped in out of fear of missing out, but this time I just waited. I watched price move, pull back, and confirm. Then I entered. Small risk, tight plan. The trade hit target exactly as planned, but that wasn't the win. The real win was what happened inside me. For the first time, I didn't feel the urge to celebrate. I didn't feel lucky. I felt calm. That's when I realized something profound. The goal isn't to control the market, it's to control yourself. Every trader talks about discipline, but very few understand what it actually means. Discipline isn't about being perfect, it's about acting according to your plan, even when your emotions scream otherwise. I started to see trading not as a career, but as a mirror. Every trade was a reflection of who I was, my fears, my impatience, my ego. When I was greedy, my entries were sloppy. When I was afraid, my exits were early. When I was confident but humble, my performance was stable. Trading became a form of meditation. Every session, I had to face myself. That's when I stopped chasing the money and started chasing mastery. I began to reframe success, not in terms of profit, but in terms of process. Not in how much I made, but in how well I followed my plan. Not in avoiding losses, but in accepting them with clarity. And strangely enough, when I stopped caring so much about the outcome, the results started improving. One quote that changed my perspective forever came from Mark Douglas, author of Trading in the Zone. "You don't need to know what's going to happen next to make money in the market." That line hit me like a bullet. For years, I had been obsessed with predicting the market. I thought being a good trader meant being right. But real trading isn't about prediction, it's about reaction. The best traders don't forecast, they respond. So I shifted everything, my system, my mindset, my daily routine. I built rules not just for entries and exits, but for my state of mind. If I wasn't emotionally centered, I didn't trade. If I was chasing a loss, I walked away. If I felt invincible, I cut my size in half. Because in this game, your biggest drawdowns don't start on the chart, they start in your head. Over time, that calm I felt during that gold trade started becoming my baseline. I stopped needing to prove anything to anyone, not even to myself. Trading stopped being about winning. It became about alignment. And that's when the compounding started. not just in my account, but in my growth as a person. Once my mindset began to shift, I realized something crucial. Without a system, emotion always wins. But without self-mastery, no system can save you. For years, I'd been jumping from one strategy to another. Indicators, EAs, signals, even so-called institutional courses that promised insider knowledge. Every time I hit a losing streak, I blamed the system, not myself. But when I looked back through my journals, one thing stood out. Every profitable period I ever had came from the same pattern: clear structure, controlled risk, and patience. That's when I started building my system from the ground up, not from what others said worked, but from what fit me. I called it price to liquidity to psychology. Let me break that down. 1. Price. I stripped everything off my charts. No indicators, no oscillators, no moving averages. Just price. I learned to see the story hidden in the candles, where liquidity builds, where institutions hunt stops, where the crowd gets trapped. Market structure became my language. I stopped asking, is this a buy or sell? And started asking, who's trapped here? And how will smart money exploit it? That one question changed everything. 2. Liquidity. Liquidity is like blood flow in the market. Retail traders chase price, professionals chase liquidity. Most perfect entries retail traders love are just liquidity magnets. That's why I stopped entering at breakouts. I waited for the stop hunts. I looked for where traders were wrong, not where they were right. Because in this game, profit lives where pain exists. So I built rules. Never enter on impulse. Wait for liquidity to be swept. Trade away from the trap, not into it. Always confirm with structure, not emotion. 3. Psychology. This was the final piece, the one I used to underestimate. A system is only as strong as the trader behind it. So I designed my trading routine to protect my state, not just my capital. Here's what that looked like. No charts until after meditation. 2 setups maximum per day. Walk away after 2 losses. No exceptions. Record my trades, voice my emotions, and journal the why, not just the what. Trading stopped being random. It became ritualistic, almost spiritual. And slowly, my results became consistent. Not explosive, not flashy, but steady. And that's when compounding truly began. I remember when my account hit $10,000 for the first time. It wasn't the number that mattered. It was the consistency behind it. Every dollar was a reflection of discipline, not luck. My system didn't promise perfection, it promised probability. And once I truly accepted that trading is a game of probabilities, not certainties, I became free. When you stop needing to be right, you start being profitable. When you trade what you see instead of what you feel, the market stops being chaos. It becomes language. That was the foundation that would later turn my $100 account into something far greater. Not because the strategy was magical, but because for the first time in my life, I was consistent.
Once I built my system, the next challenge wasn't finding more trades, it was doing less. Every trader dreams of flipping an account fast. But the truth? The fastest way to grow in trading is to slow down. I learned that compounding doesn't happen in the market, it happens in the trader. It's not your account that compounds first. It's your mindset, your discipline, your patience. When my $100 account reached $300, I didn't celebrate because I knew, in the past, that's exactly where I used to crash. I'd get overconfident, size up too fast,
chase profits I hadn't earned yet. This time, I did something different. I didn't increase my lot size. I increased my data. Every trade I recorded, setup type, liquidity level taken, emotional state before and after entry, whether I followed my plan. Within 90 days, I had a small but consistent equity curve, not because every trade won, but because every mistake was studied. That's when I discovered something profound. The goal isn't to make money. The goal is to become the kind of trader who deserves to. So I applied a 90-day compounding model. Phase 1, consistency over profit. Trade with minimal size just to prove emotional discipline. Phase 2, controlled scaling. Increase size by 20% only after 30 consecutive days of rule-based trading. Phase 3, partial withdrawals. Withdraw small amounts monthly to train detachment from account equity. And it worked. Month after month, the account grew. 100 became 500, 500 became 1,200. It wasn't linear, but the equity curve had character. Drawdowns that taught lessons, not despair. I remember one trade that marked a turning point. It was Euro USD, New York session. Liquidity swept just above an old high. I entered short. The setup was textbook perfect. The trade went into profit, then reversed and hit break-even. Old me would have tilted, blamed the spread, revenge traded to get it back. But this time I smiled because I had followed every rule perfectly. No emotion, no reaction, just execution. That day, I realized I had finally become a professional. See, professionals don't define themselves by P and L. They define themselves by process. And once I embraced that truth, the results started accelerating, not because of luck, but because I stopped fighting the probabilities. I also learned something most traders overlook. Environment matters. I cut out the noise. No Telegram groups, no Signal chats, no FTMO flexers. I surrounded myself with silence, routine, and structure. Trading became less about catching moves and more about catching myself when I was about to break character. And that's when compounding became effortless, not in the mathematical sense, but in the emotional sense. Because when your actions align with your identity, growth becomes inevitable. So no, I didn't flip $100 to $1,000 overnight. But I built a foundation strong enough to handle a $100,000 account later, without breaking, without shaking, without losing who I was. And that's the real secret no one tells you. The market doesn't reward skill. It rewards stability. Compounding is the art of staying sane long enough to let math do its job. That was the moment I knew I wasn't chasing fast money anymore. I was building forever skills. There's always that one trade, not the biggest, not the flashiest, but the one that changes you. For me, it was a random Thursday in 2018. I was watching GBP USD during the London-New York overlap. Price had just swept the morning high, volume spiked, and I saw the setup I'd been waiting for. Liquidity grab, displacement, fair value gap. It was perfect, so perfect that it almost felt too easy. I entered short with confidence. Within minutes, the market melted in my direction, plus 50 pips, unrealized profit flashing. My pulse was calm, my breathing steady. Then, it happened. Out of nowhere, the market reversed, reclaimed the imbalance, and ran straight into my stop. A perfect setup, perfectly executed, and still a loss. The old version of me would have gone off the rails, blamed manipulation, cursed the brokers, opened a revenge trade to get it back. But instead, I sat there, in silence. No emotion, no panic, just observation. That's when I realized, the market isn't here to validate you, it's here to reveal you. I went back through the replay data that night.
I noticed something subtle. My entry was technically flawless, but my expectation wasn't. I expected the market to move for me, but the market moves through everyone. That night, I wrote this in my journal. A professional trader doesn't seek certainty. He seeks clarity. And that sentence changed everything. I stopped trying to predict and started trying to align. I stopped trying to win and started trying to listen. Because here's the paradox no one tells you. The day you stop forcing trades is the day the market starts flowing to you. From that moment, I began to view trading like surfing. You don't control the wave, you prepare, you position, you wait. When the wave comes, you ride. When it doesn't, you sit still. That one realization, that you don't make trades, you allow them, flipped my mindset completely. I rebuilt my system around patience. I would mark my zones, set alerts, and walk away. No more charts glued to my face, no more overtrading. Some days I took no trades, and it felt amazing. Ironically, that's when profits exploded, because I wasn't chasing anymore. I was letting the probabilities play their part. My win rate didn't skyrocket, but my accuracy of execution did. Every trade became an act of alignment, not prediction. Every loss became a tuition fee, not punishment. That was the moment I truly crossed the line from being a trader of markets to a student of behavior. And that shift from ego to observation was the real million-dollar move. Because once you stop trying to prove you're right, you finally start trading the truth. I remember smiling the next day when I took another trade. Same pair, same setup, same logic. This time, it worked beautifully. But what mattered wasn't the profit. It was the calm, the stillness, the peace of knowing I didn't win against the market. I simply moved with it. That's when I knew I was no longer gambling. I was mastering alignment.
Most traders think the market is a puzzle to be solved. But after 15 years, I've realized it's not a puzzle, it's a mirror. It doesn't test your strategy first, it tests your self-control. And that's why most people fail. When I finally understood this, everything changed. Trading wasn't about finding the best system anymore. It was about building the best version of me that could operate that system with consistency. Because here's the uncomfortable truth. You don't rise to the level of your goals. You fall to the level of your discipline. The markets are a perfect feedback loop. Every decision you make is a reflection of your mindset at that moment. If you trade from fear, the market will show you fear. If you trade from greed, it will expose greed. But if you trade from clarity, it will reward clarity, not immediately, but inevitably. Over the years, I began to see the deeper structure beneath the charts. Every fake out, every stop hunt, every pump and dump, it all made sense once I realized the market moves to transfer risk, not to reward prediction. The whales, institutions, algorithms, they're not hunting you. They're seeking liquidity. And where's the liquidity? Right where retail traders hide their stops. That's when I started studying smart money concepts, SMC. Order blocks, fair value gaps, mitigation zones, all those patterns became windows into how the big players think. I stopped seeing the market as an enemy and started seeing it as a structured ecosystem, one where survival depends not on aggression, but on adaptation. That's the deep insight. You don't need to outsmart the market. You need to outlast your own impulses. Because your biggest losses don't come from bad analysis. They come from emotional reactions, from pressing buy out of boredom, from moving your stop just this once, from chasing a candle because it looks good. Real traders, the ones who last, are masters of emotional silence. They can sit through drawdown without panic. They can close a small loss without frustration. They can see the market run without them and still smile. It's not that they don't feel emotion, it's that they've learned not to obey it. That's the hardest lesson to internalize. Because everyone wants to win, but not everyone wants to wait. And trading rewards the ones who can wait. Once I understood this, I changed my entire process. I started journaling every trade, not for results, but for behavior. Did I follow my plan? Did I feel calm? Did I enter too soon? That journal became more valuable than any indicator I ever used, because patterns on a chart are meaningless unless you can recognize the patterns in yourself. The market is simply a mirror showing you where you're inconsistent, impatient, or impulsive, and every losing trade is an invitation to grow. When I teach new traders now, I tell them this: your trading account is just a scorecard of how well you manage your human nature. It's not about the setup, it's about the state you're in when you take it. And once you truly see that, once you internalize that trading is 80% psychology, 20% mechanics, you finally start to play a different game. Not one of chasing money, but mastering behavior. That's the real edge. And it's an edge no one can take from you.
After I learned that mindset was everything, I stopped chasing new strategies and started refining my process. That's where the transformation really began. Because mindset, without structure, is just wishful thinking. You need a framework, a way to translate discipline into daily behavior. So I built a system around 3 principles that I still use today: clarity, control, and compounding. 1. Clarity. Only trade what you understand. Every trade I take must have a clear narrative. Why is price moving? Who is trapped? Where's the liquidity? If I can't answer those questions, I don't trade. You see, most retail traders want to be in the market all the time. They're afraid of missing out, afraid of being wrong, afraid of being still. But the best traders know that not trading is a position too. One of my mentors once told me, if you can't explain your trade to a 12-year-old, you don't understand it well enough to risk your money on it. That hit hard, because half the time I was entering trades I didn't fully understand. I just didn't want to miss the move. So I started simplifying everything. One setup type, liquidity sweep into structure, one risk per trade, 1%, one pair focus, Euro USD. By narrowing my scope, I gained clarity, and with clarity came consistency. 2. Control. Risk is the only thing you can truly own. Traders love to believe they can predict, but prediction is fantasy. Control is reality. The only thing I can control is how much I lose when I'm wrong. So I made a simple rule: never risk more than 1%. If I lose 3 trades in a row, I stop trading for the day. Not because I'm weak, but because I respect emotional capital more than financial capital. That's something most traders don't understand. You can refill your account with money, but not with confidence. Once confidence breaks, you start trading for revenge, and that's when the market eats you alive. So I built rituals around control: pre-market meditation, trade journal entries before and after each trade, stop-loss placement before entry, never after. I turned trading into a performance routine, not a gamble. 3. Compounding. Small wins repeated relentlessly. Everyone dreams of turning $100 into $1 million overnight, but that dream blinds them. Real growth is boring, it's slow, it's repetitive. The trader who compounds 1% a day for a few years will outperform the one chasing 50% in a week. Compounding doesn't just apply to money, it applies to skill.
Every time you review a losing trade, instead of ignoring it, you grow. Every time you follow your plan, despite the temptation to break it, you strengthen your discipline muscle. Every small act of patience compounds into long-term mastery. And when you think about it, that's exactly how Daniel did it. He wasn't chasing massive wins. He was compounding good habits, trade by trade, week by week, year by year. That's why his $100 became a fortune. Not because he found a magical strategy, but because he became the kind of person who deserved that outcome. Trading is not about predicting the market's future. It's about creating your own, one disciplined decision at a time. When people ask me now, "What's your secret?" I smile and say, there is no secret. There's only repetition. You can't fake consistency. You can only live it. And if you do, the market eventually rewards you, not for brilliance, but for endurance.
It didn't happen overnight. In fact, it took me nearly a decade to truly internalize what discipline means. Not the kind of discipline where you force yourself to trade less, but the kind that changes who you are when you sit in front of the charts. I remember the exact day things shifted. It was late 2018. Bitcoin had crashed from $20,000 to $3,000, and the whole world was screaming that crypto was dead. I had every reason to follow the crowd, to panic, to short blindly, to chase noise, but something inside me was quiet. I didn't feel the same fear anymore. I wasn't trying to make it back. I wasn't trying to be right. I was simply following structure, liquidity, and patience, the same boring principles I'd practiced for years. And then it happened. One clean, textbook setup, a liquidity sweep followed by a strong displacement. I entered small, 1% risk. The trade ran 15R in 3 days. It wasn't the biggest profit I ever made, not even close. But it was the moment I realized I had finally crossed the invisible line between hoping and knowing. I didn't need to guess anymore. I didn't need to chase. I could wait. And that was freedom. You see, every trader dreams of the $1,000,000 trade. But the real turning point doesn't happen in your account. It happens in your identity. When you stop identifying as a gambler and start behaving like a professional, the market begins to treat you differently. The drawdowns no longer break you. The profits no longer define you. You stop measuring success by how much you make and start measuring it by how well you follow your plan. That's the paradox. The moment you stop obsessing over money is the moment you start making it. After that 2018 trade, something profound changed in how I approached everything. I reduced my screen time. I stopped checking Telegram groups, news feeds, and signals. I started designing my week like an athlete designs their training schedule. Focused, structured, purposeful. Trading wasn't just my job anymore. It became my mirror for personal growth. And that's when compounding started to accelerate. Not just financially, but mentally. Small accounts grew, but more importantly, my confidence grew. Not the fake confidence from winning streaks, the quiet kind that comes from knowing who you are under pressure. I began to realize that the real purpose of trading isn't to beat the market. It's to become the kind of person who no longer needs to. Because once your emotions stop dictating your actions, you've already won, regardless of your account balance. I wish I could tell you it was all smooth after that, but it wasn't. I still had losing weeks, moments of doubt, even burnout. But those moments no longer controlled me. They became data, feedback, part of the process. And that's when I finally understood. Trading mastery isn't a destination. It's a state of mind that you earn one decision at a time. When you can look at a losing trade and say, I executed perfectly, the market just didn't align, that's when you're free. Free from outcome, free from ego,
free from the illusion that success comes quickly. Because the truth is, it doesn't. It comes quietly, after years of doing the boring things right. And when it does, it doesn't feel like fireworks. It feels like peace.
When I look back now, 15 years, countless charts, thousands of trades, the question I often get asked is, how did you turn $100 into $1 million? And I always smile, because that's the wrong question. The real question is, how did I become the kind of person capable of turning $100 into $1 million and keeping it? See, the truth is, the markets will always test you. They'll tempt you when you're greedy, punish you when you're careless, and humble you when you think you've figured it out. The money, the profits, they're just reflections of how well you've learned to master yourself. In the early years, I chased systems, strategies, and mentors. I thought success was hidden in some secret setup, some holy grail indicator. But over time, I realized the real edge isn't in your charts, it's in your mind. The trader who wins long-term isn't the one who knows the most. It's the one who can do the least when it matters most, who can sit through uncertainty, who can wait for quality, who can stay calm when everything looks chaotic. Because patience is profit. Clarity is profit. Consistency is profit. The irony is that the $1 million mindset has very little to do with money. It's about the kind of habits, principles, and values you build while pursuing it. There came a time when my account grew past 7 figures. It didn't happen in one trade. It happened through hundreds of small, disciplined decisions that nobody saw. No flashy cars, no screenshots, no flexing. Because by then, I had already changed. The money no longer felt like the goal. It felt like a byproduct of alignment. Every winning day felt ordinary. Every losing day felt manageable. The market wasn't something I fought against anymore. It was a rhythm I moved with. And in that rhythm, I found peace. That's the part people rarely talk about. The quiet fulfillment of knowing that you built something real, not just in your trading account, but in your mindset, your patience, your emotional balance. So when people ask, what's the secret to turning $100 into $1 million? I tell them this: don't try to turn $100 into $1 million. Try to turn yourself into the kind of person who could. Because once you do that, once your mindset, habits, and discipline reach that level, the money becomes inevitable. The goal isn't to trade more, it's to trade better. The goal isn't to predict the market, it's to react intelligently to whatever it gives you. The goal isn't to win every trade, it's to survive long enough for your edge to play out. That's what every professional understands. Longevity beats intensity. Control beats excitement. And consistency, true, boring, unshakable consistency, beats everything else. Today, I still sit in front of my screens most mornings. Same desk, same charts, same quiet coffee. But I'm not chasing anymore. I'm observing, learning, refining. Because mastery isn't about what you know. It's about who you become through repetition, patience, and reflection. And if there's one final lesson I'd leave with every aspiring trader, it's this: your account will always reflect your character. If you grow as a person, your equity will follow. If you don't, it won't matter how much you start with. The real $1 million trade is becoming the kind of trader who no longer trades for money.